All right, let's talk some options flows. Let's look at some technicals. Joining me, Shane Skinner is manager of Trader Services. Joining us to take a look at S&Ps, VIX, some Shopify options. Shane, let's talk S&P first. Familiar territory still right below the 6,100. Is there some big wall of trading or options activity keeping us from breaking out, or what's going on?
It's been muddied today between about 60 to 60 75. You're seeing quite a bit of volume, mainly on the call side, a little bit on the put side too. But overall, it seems like this is sort of our limbo area for the day, if you will. In terms of the next 30 minutes, if the market were to break out of this sort of limbo range, if you will, upside, you're expecting about 60.85, 6,100 would be just crazy at this point. So I think 60.85 is roughly about your max upside. And then to the downside, you do have a max pain level currently at 60.45, 60.50 has quite a bit of support there as well. So if you were to break out to the downside, I would expect, 60.45, 60.50 is going to act as a potential magnet, and you might even close down there. But, with as much activity as we've been seeing between the 60, 65, 70, 75 strikes, it's very possible we could just run sideways for the rest of the day here.
Okay. What will you be looking for to kind of sense if we're approaching the old highs with enough momentum to punch through them? Because there's a kind of a unique thing going on here where the move from below 6 to above 61 has basically happened 3 times in a row. From mid-Jan to the first attempt, which actually did get to the index new high, and then again late Jan, and then again earlier this month. I mean, all these like week-long runs all look kind of similar, but each one's faded a little bit lower.
Yeah, I think that it's no surprise that you have a Fed pause in that time period. You also have, it looks like some rebalancing going on across the index and certain names. We've got big earnings season coming up, very anticipated. And so I think what we're seeing is at the index level, it's kind of choppy, kind of, retracing back and forth around 6,000, 6,100. And, until I think we get through earnings, that won't break. Now, we do have a big VIX expiration coming up next week, as well as, monthly expiration in general for the indexes. So we would expect that that's going to start really take hold here in the next coming trading days and have some potential influence on where this ends up going sort of beyond this range that we've been stuck in, like you said, sort of the past month or two now.
Okay. All right. Yeah, it is so kind of stuck, right? Seems like the best way to look at it right now. We talked VIX earlier. Russell Rhodes was pointing out the premium on upside calls versus puts right now. How are you reading VIX here below 16?
Yeah, so it looks like based on how I'm seeing like the monthly VIX expiration for next Wednesday, it seems like 15 is your sort of bid where you're likely going to catch support. A break below that and continuation below that would likely require some kind of melting up in the index, in the SPX, and simultaneously you're probably going to need to see an increase in activity in strikes below that 15 level. There's basically nothing going on down below that. So I'm looking at 15 as acting as sort of a support. You can see that there down below in red. This blue range here between, we've got about 17 to 18 on it. There's 2 key levels, 17 and 17 and a half. 17 is the max put open interest at this moment in time. So that usually acts as a significant level to pay attention to, as well as max pain at 17 and a half. So the way I'm sort of gauging it based on what I'm seeing, I wouldn't be surprised if we see VIX uptick a little bit here, back up into the 17 and a half spot or range roughly. That would put the S&P right around 6,000 plus or minus maybe 25 points. And so, a move like that within VIX and a move like that within the S&P between now and next Wednesday, I don't think that's abnormal. It'd be about a 1.5% drop in the S&P if that were to take place. And if you do see that 15 level, if we go back down and test it again, maybe the S&P gets what it needs, vol crushes a little bit more, and we finally break out of this, range we've discussed to the upside finally.
Okay, so that's kind of the answer I think that I was looking for on what would suggest that we do have the real breakthrough momentum. And it seems like kind of the equivalent rejection around 61-ish or so is basically VIX pretty close to where we're at now, down below that 15. All right, I like that. Let's talk some Shopify. I think this is where some of the excitement's going to start this week. It's got big growth expectations. It's definitely a options-heavy traded kind of speculative name. Any strikes, any bias in the options flows right now that you can see?
Yeah, I mean, it looks like there's a solid balance between the call and the put side. The put call ratio for volume on the day is about 0.78. Put call ratio for open interest for this expiration specifically is about 0.82. A ratio below 1 by some is considered bullish. Obviously, there's plenty of trading to go on between now and earnings tomorrow. But at this moment in time, the 120 level really sticks out. That's the max call open interest level. There's just a ton of call activity there. So I would suspect that to act as a bit of a magnet as we've seen it play out today. 115 is your max pain level at this moment in time. So I wouldn't be surprised if tomorrow you're still somewhere between 115 and 120. If you're bullish, you're hoping 120 finally gives. And then what you're really eyeing is a break to 25. And then beyond that, you're hoping to land somewhere between 130 and 135. Obviously, we're going to continue to need to see continued strong guidance growth on the earnings, revenue. Also, what's going on with merchant adoption and improvement in consumer spending trends. How's the e-commerce space looking going into the new year? If you're looking to the downside, obviously you're hoping for the miss on earnings, revenues. You want them to come out with some kind of a concern over competitors or any sort of macro uncertainty relative to the consumer, right? And so your levels to the downside that you're eyeing at that point is, if 115, that max pain level breaks, you're eyeing 110, and then about 105 to 110 is where you're hopefully catching support,
Okay, that
not
107
falling
gap.
off a cliff. Yep, and exactly. So we've got a gap at about 115, and we've got a gap at about 105 to 107. So I would not be surprised if we see, unless earnings are just magnificent, we might see a little bit of a retrace back down, nothing crazy. Fill one or two of those gaps, consolidate a little bit more, and hopefully they continue to seek growth, and they can catch a little bit of a bid down there before they take this thing back to all-time highs, or recent highs, I should say. One other thing I wanted to note is that currently market maker moves pricing in about a 14.5 point move. So ironically, that lines up perfectly, right, with that like lower gap, right? That 105, that's about 14 points off of where we are now. And then again, to that upside, you're looking to the 30-35 level, which again, that's right around in line with that market maker move. So, as long as that holds, I wouldn't expect to see much below 105 or above 30 to 35. And if you're looking to crush fall in this situation, you're probably hoping this thing sits between about 150 and 120.
It seems like the chart bias is pretty positive because you've got support nearby. And it feels like if you get a move to the downside and you were positioned for that, you're probably going to be pretty quick to take some profits, be happy that you were able to kind of scalp a bad earnings in an otherwise good trend. Whereas the odds and the chart kind of favors the general upside, especially with all the activity happening a good ways out there. So fun one for sure. Maybe some pent up bullishness, but it's obviously got some chop in the last 3 months here. Appreciate it, Shane. Good stuff. Yeah. Nice setup for us.
Thank you.
Appreciate that very much, Shane.